Let's talk about your credit score. Okay, I know this is very anxiety producing for many people because it's a big deal. If you're thinking about buying a house, it's an even bigger deal because if that damn credit score is looking just a little crusty around the edges, it's going to cost you money each and every month with higher interest rates. As we move into a time period of higher interest rates now, more than ever, if you want to buy that house, you should be doing what you can to improve that baby. Today, I've got Pete Johnson with GreenState Credit Union here with me to chat about what makes up your credit score, actionable steps you can do to improve your credit score, and things that you need to know to make progress. Okay, first, I want to make a disclaimer up front. The credit score a consumer is going to see about themselves is not exactly the same as what a mortgage lender will see. Right, Pete?
Yep.
Can you explain that?
Yeah, absolutely. Yeah, that's one of the biggest questions we get when people come into our office. One of the biggest points of confusion is why their Credit Karma score, their freecreditreport.com score, the credit score that's on their credit card statement doesn't match up with what we pull. And that's a common thing. The credit score that we pull is what's called a tri-merge credit report. So we pull from all three bureaus. It's one credit pull, but it's all three bureaus. And it comes directly from the credit reporting agency. So TransUnion, Equifax, Experian comes directly from them. And so the credit scores that you see on your credit card bill or Credit Karma try to mimic that credit score and the information that they use, but they actually don't have access to that exact algorithm, the formula, so to speak, they're coming up with that score. And so it's quite often common that you'll see the credit score be maybe up to 40, 50 points different than what we pull on the credit report. So It can be kind of confusing. And one thing to note is that we'll take the high score and the low score and throw those out, and we'll actually use the middle score. So we're using the middle of the three, and because those scores are different is what causes a lot of confusion there. So it's not always the same. It can be the same, it's not always the same.
What sources do you recommend consumers look at if they're trying to figure out their credit score?
Yeah, if you're getting pre-approved for a mortgage, generally that's one of the best places to start. Actually, if you're getting pre-approved, we're going to pull a credit report for you, and that's the score that the bank's actually going to use. So it's not a bad idea just to do that in the process of getting pre-approved. You don't necessarily have to be on the verge of writing an offer on a home to get pre-approved. We can pre-approve you a year, 2 years in advance. Otherwise, if you want to just check it out yourself, I'd recommend you go directly to the bureaus. It's going to cost you a little money. It's not as good as free, obviously. But it's going to cost you maybe $20, $30, $40 to get your credit report, but that's the only surefire way to get your actual report. Some of the Credit Karmas, the credit card statements that we talked about before, those are great for seeing if you have fraud on your credit report. So if somebody's opened an account in your name, there's something on there that shouldn't be on there, a collection maybe. It's going to show you that information, but it isn't going to give you the meat of a credit report, which is the credit score itself, which is what we're using to kind of make that determination.
So if you're paying money to get them directly from the sources, do you need to pull from all three, or can you just pull from one?
It's usually sufficient to pull from one. So most of the time, the information on the credit report is going to be the same across. Rarely, it'll be different, but generally speaking, one is enough to kind of get you started and catch any of those major landmines that might be in your credit report that you didn't know about. That's really what you're trying to do, is prepare.
So in speaking about getting your credit pulled, I know a lot of folks are freaked out about letting their credit get pulled because they've heard that it's gonna ding their score. Is this a myth?
Yeah, it is. It's one of the biggest myths, actually. So I hear that quite a bit. You get a lot of people that are afraid to let us pull their credit score for that reason. But you're actually allowed 6 credit pulls in a year before it damages your credit, and so you'd have to pull your credit a lot for it to actually damage your credit. And that part of your credit score is actually a really small part of your credit score. It's not a huge part anyway. So even if you have pulled it a lot, it's really not that big of a deal. And it's really the advantages of actually allowing the lender to pull your credit or far exceed, in my opinion, any damage that it might do to your credit score, because a lender can't really give you any information that's useful without grabbing that credit score and that credit report.
You're trying to work blind.
That's right.
So I've heard if somebody wants to shop lenders, if they condense that shopping period into a few weeks, all of those lender pulls really only count as one.
That's right.
Is that accurate?
That's right. Yeah. So you can check your credit as many as 6 times in a month before it counts as one in the year. They're kind of assuming that you're probably doing some shopping when you're looking for a mortgage or even a car loan or a credit card, something like that. So you're allowed to pull it within a month. And so you would have to, like I said, pull your credit an insane amount of times, probably more than anyone would ever actually pull their credit before it did any damage that would make a difference in the credit decision. Let's put it that way.
Okay. Are there any like surprising or secret ways that you might get your credit pulled that you're not aware of? For instance, I've heard that if you're applying for a new cell phone plan, that you may get your credit pulled for that.
That's right. Yeah. So if you're applying for like auto insurance, cell phone, sometimes even utilities will pull. A lot of times they're doing a soft pull credit report, which means they're not actually pulling the credit report. They're just verifying the information. That's not going to count against you. But the best thing to do is just to inquire about what type of pull they're doing. Again, I wouldn't be too concerned about it because it just doesn't make up that much of a difference in your credit score even when it is pulled. So
okay. So if somebody wanted to ask, the terminology would be, are you doing a hard pull or a soft pull?
That's right. Yep. Soft pulls generally aren't going to count as one of those 6 against the year, whereas a hard pull will.
Okay, talk to us a little bit about minimum credit scores needed to qualify for a mortgage, and what is the score that you need if you want those very best rates?
Absolutely, absolutely. So the best score, anything over a 740, typically speaking, is going to be where you need to be for usually best rates. And you can go as low as 620, and there are some programs out there that allow you to get down to about 600. Anything under 600 gets really tricky. In those lower credit score ranges in the 620 to maybe 680 to 700 range, you're going to see probably higher interest rates, maybe fewer programs that you qualify for. So it's not to say that you can't get qualified under a 740. It just may mean slightly higher rates, less programs. Anything over a 740 though, and you should get the best rates in terms available with the maximum amount of programs as well.
Cool. Okay, Pete has a handy pie chart for us that we're going to take a look at that shows what the major categories are that go into your credit score and what the percentage of importance of each one of those categories plays in your overall FICO score. So the 2 biggest categories are a person's payment history and the amount of debt they owe on their accounts. What highlights can you give us for people to work towards improvements in these 2 areas, Pete?
Yeah, so obviously the most obvious one is payment history. So if you make late payments, that's obviously going to have a big impact on your credit score. It's going to lower it, especially stuff that's happened recently. That's going to drop your score pretty severely. So a lot of times I have people come into my office and their scores drop. They didn't even know it, and it's usually because they set an auto pay they thought was an auto pay, but it really wasn't. So kind of keeping an eye on that, making sure your auto pays are set up correctly, and more importantly, going in and verifying that the payments have actually come out. That's a lot of it. Medical collections, things like that. These are things that people thought were paid for and maybe they had a copay they forgot about. So just being cognizant when you're paying bills, especially medical stuff and student loans. We tend to see a lot of late payments on medical bills, student loans, things that people didn't intend to pay late, but they just were late because they didn't know about it. So being aware of that and making sure that you're tracking those payments, because that's a huge part of it. The other big part of your credit score is the proportion of balances to credit. So for example, if you have a credit card that has a limit of maybe $10,000 and you've got it maxed out at $9,000, that's going to have a huge impact. That's probably a 30, 40 point difference in your credit score. So keeping those credit cards below 30% of their available limit. So if you've got $10,000 available limit on your credit card that you could go to, you generally want to keep that below 3,000, and that should keep your credit score pretty healthy.
Interesting. So let's back up just a little bit to late payments. How many days counts as late?
Yep, typically 30 days. So most creditors will not report payment late past 30 days, although each loan's different. But typically it's 30 days late. That actually will show up on a credit report. And obviously it gets worse the later you are. 60, 90-day lates are going to start to accrue there, and those start to get really nasty in terms of how they impact your credit.
So the next most important category, according to your pie chart, is the length of your credit history. It accounts for about 15% of a credit score. Can you enlighten us on that?
Absolutely, yep. So the length of time you have credit is important. Typically what we're looking for there is longer term credit cards. So if you've had a credit card, for example, for 10 years versus a credit card that you just opened yesterday, that credit card for 10 years that you've had for a really long time is going to have a more positive impact than that new card that you just opened. And obviously if you have no credit, We usually recommend that somebody at least go out and get a credit card established so that you have what we call a trade line, something that shows up on your credit so you can start establishing credit. But what you don't want to do is go out and cancel those long-term cards. So if you have cards you've had for 10 years, you decide to go out and maybe get a better credit card, you're closing out that old credit card. That's where you can see a ding to your credit because you're eliminating a card that you've had a history with over a long period of time is better than that one that you have brand new. So the better idea is to probably keep both of them open and then use them. Use one, even if it was just once every 6 months or something, use it because if you don't use it, typically the bank will shut it down at some point. So if they see you're not using the card, usually for security reasons, they'll close the card for you. And then it has the same impact as if you closed it yourself. So you really want to kind of keep those credit cards open if you have them and keep them open for a long time. I like to have 1 or 2 cards that I use all the time and just have 1 or 2 and then use them and keep them for long periods of time.
Okay, so this brings up a question to me. What about those folks that are practicing Dave Ramsey way of life really hard? They don't want any credit anywhere. They've shut down all those cards. They're trying to go debt free. All of a sudden they want to buy a house. What should they do? Yeah,
I would say if you have a lot of cards, if you're in that position where you have a lot of cards and you're trying to do some debt consolidation, that's fine. You can pay the cards off, right, and keep them at a zero balance. I'd maybe wait to close them until after the house. So get the house purchased first and then close the accounts out. Just so you don't see that immediate ding. After the fact, when you're going to apply for like car loans, credit cards, things after the house doesn't impact you quite as much as it does when you're making a big purchase like a house. That credit score could change your interest rate, and that makes a big difference over a long period of time on a big purchase like that. So.
What about the people who have been living that Dave Ramsey lifestyle? They've already shut down all their credit, and then they show up in your office and they want to qualify for a mortgage. What should they do?
Yeah, there's a saying kind of in our industry that having no credit is as bad as having bad credit. So as weird as that sounds, you definitely want to have something out there, some trade lines. And I do have people like that just said, to heck with it, I want no credit cards. And that makes sense. I understand that. Not having debt feels good. But you definitely want to use credit because unless you have a history of credit and using credit, the credit bureaus will give you maybe no score in a worst case scenario. They might give you a bad score in a best case scenario. And they're not saying that you have bad credit per se or that you don't make your payments on time. They're just saying that they don't know who you are because you don't do anything. You don't borrow any money, so we don't know. And so it's kind of a bit more of a question mark. A lot of people get frustrated and they see no score or a bad score and they're like, what the heck? I pay all my bills on time. I don't even have credit cards. Why do I have a bad credit score? That's why. It's because they don't know who you are.
Fascinating.
Yeah.
The remaining 20% of the pie chart is split between 2 categories, types of credit and new credit. What can you tell us about these categories?
Yeah, the types of credit is basically how you balance your credit. So what types of loans do you have? So typically you like to have kind of a balance. You might have like a mortgage. You might have an installment loan, which is basically like a car loan, something that you pay over 2, 3, 4, 5 years and then it's gone. And then revolving debt, which is like a credit card. So generally speaking, I tell people it's nice to have maybe a mortgage, a car loan, and then 1 to 3 credit cards max. You don't want to have maybe 100 store credit cards. I see that too, where you've gone out to Kohl's, the Von Maur, the Target, you have one everywhere. I'd say stick to a handful of cards that you actually use on a regular basis. Even if they're store cards, that's fine. But have that mix. And this isn't necessarily super important. I wouldn't focus on it too much. Compared to your balances, it doesn't have nearly as much of an impact as you think. So not something to be obsessed about, but just something to maybe be aware of.
If someone is wanting to make moves to improve their credit, how long should they expect it to take?
Yeah, typically about 60 to 90 days. So that's another thing that I get a lot with people that are coming in. They say, hey, I paid off that car loan, or I paid off that credit card, or I got rid of that collection. And they kind of expect a 24-hour turnaround. And it doesn't quite work that way.
Don't we all?
It can take 60 to 90 days for that to be reported. The creditor has to report that to the credit bureau, and that doesn't happen overnight. So it'll take a little while. There are some credit repair companies out there that can help you rapidly rescore that credit score and get it done quickly, and we can kind of point you in the right direction for that too, if it's needed, if you're in a time pinch. But generally speaking, I would anticipate maybe waiting to pull that credit in for maybe 90 days to be on the safe side.
So if you're going to a credit restoration company, what is the magic sauce that they're sprinkling that they can make it happen fast? What do they do?
Yeah, there's the right answer is there's no magic bullet for credit repair. So I'd be really leery of anybody that tells you that for a fee they're going to magically snap their fingers and your credit's going to be good. The truth is there's really no real solution other than just time and effort and putting a plan together. So the credit repair companies that I work with, Heartland Credit Restoration up in Cedar Rapids here is a really good one that I work with. They basically do more of an advisory role. So they'll come in and take a look at your credit, and they'll basically kind of put a plan together, whether it's changing habits or maybe you've got some collections that weren't yours, maybe you've got some fraud. There's some things that they may be able to delete off your credit report, but there's nothing that's really going to be able to necessarily snap your fingers and fix it. So I highly recommend getting with them, more so just to get on a plan for getting the credit fixed. Try to identify what the problem is. What they're really good at is basically telling you how to shuffle your credit around, what the best way to manage your balances and your cards is going to be to get you a better score quickly.
Awesome. I will leave a link for Heartland Restoration down in the description of this video. If anybody wants to contact them, that's how they can reach out to Heartland.
Absolutely.
If you'd like to talk to me about buying, selling, or relocating here in the greater Iowa City area, or if you'd like to talk to Pete about applying for a mortgage for your future home purchase, you're going to be able to find all of our contact information in the description box down below this video. If you're watching on your phone, you just need to tap the title and it will open right up. Stay tuned for another video designed to help you make intelligent choices in real estate.